give us a sense. So you've established some really valuable context, but I want to try and get a better sense of how you think it's going to play out. So things are not going to be the same. What is going to happen with inflation? In the period after the financial crisis, we saw this monetary levitation. We saw asset prices rise. As you pointed out, we saw a widening of the wealth gap, if you will, the rich getting richer. We did see the buybacks that you talked about, the amount of leverage that was built into the corporate economy. How will that be different? Are we going to have more inflation? Will asset prices rise the way they did before? Is, to the point that you just made a moment ago, will the Fed in its asset purchase program be able to manage interest rates and yields, more importantly, market yields, the way that it's been able to up until recently?
Well, you gave me a bunch of questions there, so I'll take them bit by bit. Let's start with the inflation component. There's inflation in goods and services, and then there's the value of money and inflation in certain assets. I think the period that we're going through right now is most analogous to the 1930 to 1945 period in many, many, many ways. And so in that period, what you had is deflationary pressures, much the same way as we have deflationary. I mean, think about is the supply demand of goods and services such that it's tight? And well, in other words, we're short of the goods and services, and so prices are high. And that's one type of supply demand inflation. Then there's monetary inflation. And so like in the 1930s period, when you had deflation of goods and services, and you had inflation because of financial assets and other things because they produced it. And so you saw a series of currency declines. So you saw one country after another devalue its currency in relationship to other countries' currencies and in relationship to gold, which was then considered the money. And so there were those devaluations. Very similar. Another period of time that seems very similar to me is the 1980 to 1990 period, because what happened then is the world had a lot of debt and money was tight. And then what happened is there was a debt crisis, and it differentiated some countries from other countries. So the emerging countries that owed a lot of debt and also didn't have the best benefit of the money that was coming out of the Federal Reserve had a crisis from 1980 to 1991 when they put the Brady bonds in. But at the same time, the United States was going through a reflation period in which assets reflated, but inflation rates fell globally. So it's important to distinguish what we mean by inflation. This is not a supply-demand kind of global supply-demand. We're going to be short of things, we're going to bid up its price kind of inflation. We have to deal with the monetary inflation. And I think in the early stages of this, you're going to see it reflected in asset prices. So you see it reflected to some extent in gold and to some extent into stocks and other things. I can get into what I think will be the sort of the beneficiaries of that. It'll be a different kind of world. It'll be difficult to, it'll be a very selective world as to what will do well. But pay attention to the value of money. What is a storehold of wealth? No, don't just look at goods and services, because I think when we look at an economy the way we normally do, we just think it's all a function of goods, services, stocks and bonds and so on. And we may not pay enough attention to the value of money. I think we'll be in an environment where that'll be a very important issue.
Ray, I'm just going to take this opportunity to ask the second polling question